So we go to our end of lesson review, practice mode. And basically what they're doing is going to ask you to do closing entries. Okay. Here's the directions. So you click on there. You come up, use the unadjusted trial balance from 4-1. You guys have a copy of that, of the journal, your instructional guide to the problem. Journalize the closing entries. So it's not having us, I believe, post anything, and I don't believe there's a post-closing trial balance. Yeah. So as far as we know, that's all we have to do. Okay. We have the 4 entries, if you remember. We're closing the income statement credit column, income statement debit columns, accounts. We're closing income summary general, which is our net income, and then we're closing dividends into retained earnings. Okay. Where do we get all this? Then you get it from here. All right. And so what do we get from here? This is a 401 work together. We gave you a copy of it. It has adjusted trial balance. They post all those, get the items up to date. Once they're up to date, then we have this adjusted trial balance, which basically is all the numbers adjusted. So all our balances are up to date so far. These are all permanent accounts, cash, payables, the balance sheet accounts. You go through. We're keeping capital and retained earnings out of this. So dividends will be the last 16,000. That'll be the last closing entry. And so we start all these, the first one with the income statement accounts, credit balances. So if you see, I can help you. The income statement credit balances are, let's slide this over a little bit. Income summary kitchen, sales bath, purchases discount kitchen, purchases discount bath, all the way down, returns. You add all those up, right, as debits, and then you put in the credit there to make it work. Okay. Income summary. The next one is to take all the income statement accounts that are the debit balances, starting with income summary bath here, working your way down all of these through purchases bath, advertising expenses, depreciation expenses, insurance, miscellaneous, all these expenses down to federal income tax. You add all these debit amounts that are income statement column debits. These are temporary accounts that we're trying to close. We will list all of them, and you'll put the debit up here. Okay, you'll list them all, put the debit. Then lastly, the last 2 transactions, closing retained earnings. If you see up here, you had an income summary that was debited. You had an income summary, number here that was, credited and debited. The difference is what is being closed, and that is our net income amount. Okay, so that's the difference ends up being net income. Oops. So you have income summary general is closed now because you subtracted the 2. Sorry, kind of like what we did with that. Oh, I shut that page down. I went with our notes. If you remember how we did debit, credit, whatever the difference is a credit. So usually that means net income. We close it by debiting it and putting all the earnings in the retained earnings. You increase retained earnings with the credit. So it's just the difference between income summary general, debit, and credit balances, and you put that number into retained earnings. Okay? If it's a net income, you'll credit retained earnings. If it's a net loss, you'll debit retained earnings. And then the last one is just taking dividends, which is up here. Find that. Scrolling. $16,000 dividend that we paid. That's usually a debit, so we have to get it off the books. It's a temporary account, so we credit that to retained earnings. or credit it to dividends, and we dump it into retained earnings. If you want to lower retained earnings, you debit it. So that allows you to make it an accurate moving forward account of retained earnings and having dividends be closed. Then normally what you'd do is you would post all these into your ledger, then make post-closing trial balance. We're not doing that today, I guess. So that should be it. Thanks.